The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 27th day of June, getting close to the end of the month, end of the week. Oh, Dow's up 187 at 24,470. S&P's up 14 at 2737. The E-minis at 2739, up 11. Look at this pattern. Had a beautiful H. Let me just move this over right here. Had a beautiful H formation going to that peak D in the Chapman wave at 2796, round number high on the 13th of June. Comes tumbling down. It came down in a greater number of bars in the sense that we've just had two green candles, at least green candle for today. Lousy action yesterday, way better today. The Dow futures, in fact, were at the 2700.50 low 3 days ago. They had a low yesterday of 2714.75. Today they went to a lower low pre-market, and then all of a sudden there was that news, some amelioration in the projection that the China, the effort that is being made to place tariffs and all the other economic types of sanctions on China is being a little bit ameliorated. So there was a bounce from minus in the Dow. At least it was down 135, 140 points, and then suddenly it was up, and now the Dow is up 163. It was up 200 and something earlier on. But look at the E-mini. The E-mini is showing you very clearly that now the parameters are much clearer for the rest of the week. A low of 2705.50 today says a close below that will not only test the 2700.50 level of 3 days ago, probably go under 2700s and into the 2690s, which would be very negative. A bounce at this particular point now, as I said to subscribers, it needed to close above yesterday's high, break above and then close above yesterday's high, at least in the Dow. Same thing with the S&P. So this is saying that the 2749 level of the 9-period exponential moving average in the 9-period moving average of the daily chart of the E-mini futures, S&P, is very important. If I show you the 120-minute chart, you can see the outline that I usually like to take, and I just turn it into a rectangle and say, okay, very clear. The other parameters, a break above 20 today or next day, whatever it is, above 2748 round number high today, says that the 2752 200-period moving average in the 120-minute chart will become a magnet, which means that you will break the 2749 level of the daily. 2753 is the 14-period moving average. Hey, we're watching this really closely. Now I want to do a couple of things. I want to show you there's the H to the M pattern. We'll see it a little bit clearer in the Dow chart of the weekly chart. Here it is. Weekly chart shows you the template that I drew. We've made the lower low from 4 weeks ago. We haven't held above it, so that's going to make 24,000 level in the Dow is really critical at this particular point on a closing basis. Hit the 24,576 9-period exponential moving average this morning, then plop, comes down. Day's young, anything can happen. We are so oversold on a purely technical basis. Yesterday was a shocking disappointment. We'll see what happens today. There should be a couple of days of a bounce, as I said to subscribers. That's the reason why we took very nice 9% and 19% gains on some of our positions yesterday. We're still going to hold the short side. I think we're going to be going to lower lows if I'm correct. APC, thank you very much, Dave. So I'm looking at this and I'm saying to myself, okay, bounce is unfolding. The lowercase m in the weekly chart is unfolding. Let's get away from the 120-minute chart. We don't need that right at the moment of the Dow. We do need to look at the monthly charts for the next few days. I'm making a big deal about the monthly charts. Why? Look at the closes of these candles above the 9-period moving average. We broke above the 9-period moving average, never closed below it since that August, since the March 2016 break in the monthly chart. We've touched it a few times and then never even got close to it after the break in November of 2017 and 2016, the election reversal. And ever since then, up until that Roman candle, Chapman wave Roman candle of February this year in the Dow, did we touch the 9-period moving average, that black line right there, the thick black line? Reason why I made it thick is because we've spoken about it for the 12 or whatever number of years, 13 years I've been here at TFNN. Very important. Remember, I've shown the 3 panels ever since the first day I got here. I showed 4 panels, usually 120-minute chart, like here, daily chart on the left, weekly chart in the middle, monthly on the right. Now let's run these quickly. 24,063. Let's go to 24,000 is imperative. We've hit it 1, 2, 3, 4, 5 every month since February. We've hit the 9-period moving average, getting closer and closer to closing under it, but we haven't closed under it. The MACD is really a fraction away from turning negative for the very first time in a year, and the stochastic is way down 64%. The symptom is something that we need to look at, and the cause is something we need to look at. We'll do that in the next few days. So S&P, let's run this before the break. The S&P is up 13.51 at 27.36, hit the 9-period moving average, bam, gets repelled at 27.45, and it's trading at 27.36. And here again, it's really important, that big candle of 3 days ago, we need to close above it to say, hey, now we can have a much better bounce rather than a bounce attempt. That means 27.42.95 is where we need to close above that level or higher. Key support now is at 27.22 to 27.18 over the next week. H to M pattern in the weekly, monthly chart is looking great. QQQs. QQQ, what a pathetic rally, up 58 cents at 172.63. Couldn't even break into the gap, couldn't even touch the 174.02 yet. The day's young, but it hasn't got there yet. MACD is very poor, stochastic's very poor. Peak C, I really am going to do this. I wasn't going to. I have to do it. I'm going to give it an alternate count. G/C. It's the first time I've admitted that there's a chance that if the Qs start to trade under 169 by this time next week, that weekly chart is going to be a little hazardous to one's wealth. Just watch it closely. All you need now is a nice spike into the 175.80s, and I'll say, oh, okay, maybe we saved the day. We're at 172.67. Look at the IWM, the Russell 2000. We remain short the Dow. We remain short the Russell 2000 from the exact high, almost to the tick. 117.20 was the high of the 20th of June. When you get this kind of action after you successfully short, you just say to yourself, that's over the many years and years and years that I've been doing this, every once in a while we get exact top ticks of something. But believe me, you can't believe it. You shake your head and say, wow. But in the meantime, it's working, and it's a pathetic rally. I mean, minus 31 cents right now, 165.73. We'll be back. We'll talk about many of the other indices. There's no change to my status as it stands right now. We'll be back, and we also look at oil service, which is really nice.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. So let's get back. I've got a chart that I've just finished notating for someone who texted, who emailed and wants to know about something. It's about APP, and we'll be back to that in a moment. Let me just finish up here. So we're looking at the IWM just quickly to show you what is really important. The rotational aspect is really important. What it's saying is that IWM, not IWN. IWN is the value. Okay, now I want the IWM. IWM is trading now down just 18 cents. However, it's had a lousy try of turnaround. I mean, it hasn't even taken out the Monday candle. So this is saying to me that the rotation is continuing, that now you've got, for instance, our UTX, which we are still long a portion, is acting really well. So the cyclicals are now saying, hey, we've got a little bit of relief here. We're going to really have a good rally. And as it does that, so it's impacting the Qs, that's the Index 100 stocks, and the Russell 2000 are saying, look, and that includes the semiconductor index. I'll get to that in a moment. They say, hey, we've had a fantastic rally. We need to take our turn to sit on the bench and have a rest. And that's basically what they're doing. What is really important at this particular stage is that as long as there's a rotational correction going on, that does say that I've got to consider that it isn't a major turnaround. It's a selective turnaround at this particular point, depending on how the Dow's running. It's up at 202, coming back nicely, kind of dragging the others up. But in fact, what we're really looking at here is the rotational correction mode that has been in place since the summer of 2009. I basically recognized at the summer of 2010 that there were rotational corrections, that we were not getting the Granville major sell where all the index, like on Monday, all the indexes fell. It hasn't continued that way. And that says to me, don't get too carried away about looking at the downside. Just be very selective in what you're looking at and see if the rotational correction continues. And if by Wednesday today, by Friday, end of the month, end of the candle of June, by Tuesday of next week, if the Dow has started to pull back and is now trading 24,200 or getting close to 24,000, that's saying, okay, we're back to a unified sell-off. And that we haven't had in ages and ages. So the IWM parameters to watch, it better hold 163 support shorter term, 166. It has to break above the 166s, get into the 167s, and then there could be a bit better of a bounce. I think the top that was made at 170.20, I think is the top for this part of the summer. Hey, could be wrong. Gold was down a little earlier, still down. Now it's down 4 at 12.55. Not yet ready for gold. If you look at the arch formation, it says there could be maybe another 3 to 5 weeks of consolidation, even if there is a bounce. But this trend line support that we're at right this very second, better hold, because under 12.50 on a monthly basis, not a weekly basis, on a monthly basis, a close below 12.50 says, whoa, we broke support. It's going to take a little bit to get back in. And that means I've got to move this cup formation out a little bit. And that takes you to maybe July or August before there's a pretty good rally in gold. Don't see it happening just yet. Hey, wait a minute. Maybe it's because the dollar, let's see where the dollar is right now. Yep, the dollar's at almost as high as at 95.13. Outstanding action. Last two candles getting back the slight pullback it had. That weekly candle just from last week to so far this week, halfway through the week, looks really good. I still love the dollar. It's still long since April from the 90.07 level. It's trading at 95.13. I like the dollar. I think it's got legs. And, when currencies turn, when they really start to turn from short term to intermediate term, that intermediate term can sometimes last a long time. And we've been going up since January of this year in this last move. Since February, February at 88.25. So we're long from just a little off the low. And we're looking at 1, 2, 3, 4. There's only the 5th month. Well, no, it's the 4th month since the low. So, yeah, it can go on for a while. All right, let's get back to the nitty-gritties. Talking about TLT. TLT's having a nice rally. It gapped up to a leg D in a gray, but I have to make it blue because it made a full Chapman wave count. Very unusual to do a full Chapman wave count under the previous high, and that was the high of 120. Look right here, the high of the 29th of May, 122.52. We're at 121.74 right now. This is really nice action, and it's talking to me about. Remember, I said that the TNX when I did the study yesterday, or was it the day before, saying the TNX looks like it wants to pull back. It's in an arch formation. And I spoke about the diamond pattern, which has incredible connotations on those 1 or 2 times that it works. Forget about the 150 times that it doesn't work. I'm just saying, don't think of this as a diamond right now. Think of it as potential head and shoulders. And if the TNX 10-year Treasury note yield starts to climb at any point in the summertime, has a 1-week close above 30.20, it's at 28.47 right now. That'll be a very positive move for the upside. At this point, I think it's going to test this candle and probably the low of 27.59, the low of the week of June the 1st. I think it's on its way down with TLT having a rally, and that kind of corresponds to what I'm looking at, where money should flow out of equities and into bonds as a safety haven, and that'll increase if the Dow goes under 24,000. Crude oil. Boy, I did some work last night in crude oil. I was looking at Investor Business Daily. They had a bunch of oil service stocks, and wow. Anadarko, thanks, Dave. Let's see. So crude oil right now is broken out. It's in the 72.76 area, and I really have to call this because it's 85% in the stochastic. MACD is good. A buy mode. We've got a buy mode in crude oil. I thought we would stall just about 72.20, 70. No, we're at 72.75. Really strong candle. Broken out in the weekly chart. This would be a double top pattern, but so far it's way above, not way, it is above the 72.69 high of the week of the 25th of May. This is a weekly chart. A close above that on Friday would be really positive. I don't know if I can go, I can still call it an E because it can still go to an F, but it's really positive in the shorter term. And the monthly chart has just extended its monthly leg D. Look at this chart of crude oil, continuous contract, making a beautiful bowl-shaped formation. I never thought it would be, but just in this particular phase, I felt that there was a lot of political manipulation. I think there still is, but crude oil's moving higher. I'm not going to deny that. So I was asked about APC. I'm going to look at that. APC is doing really, it's in leg C. This is Anadarko Petroleum in leg C, very strong. It should go to a D. It's broken out of the weekly left side, right side price time match. Huge one. Look, this goes back to 2016, week of December the 16th at 73.33, plummets down to 41.49. September the 1st, week of the 1st, 2017. Left side, right side price time match almost made it to the exact week, just missed the high. Went to peak E, and now it's in an F/B to the upside. Why? Because there's a Chapman Wave instant restart here. I'm calling it a potential, so we're calling it F/B and a leg D in the monthly chart. APC 74.96 up $1.86. I'll be back. Got a lot of questions. I want to go through a chart. Greg wants to know about APPN. I'll do that as soon as we return. Basil Chapman, Dow's up 167.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, so let's just do a couple of things here. I had a question on the way here as the break started about the TYX, which is the 30-year yield, trading at 29.88. I think it's going to target the 200-period moving average in the weekly chart, which is it's broken above a number of times, keeps testing at 29.61. But my eye says 29.20 to 28.80 would be my first big target on the TYX, having made a peak D in the monthly chart. I think we're in for a bit of a rest, and my inclination here is to have over the last 2 days, I've had a number of aspects that I've been looking at to determine whether or not we're in a mini recession. I think we've already started some kind of a mini recession, and it has been rotational for the last year and a half, going through different sectors. But at this particular point, let's see how CTAS is trading. Tried to rally, hit the 9-period moving average. Now it's down 20 cents. Yeah, this is the overall Uniform Rentals Cintas Corporation at minus 20, 186.39. I think we're in a mini recession. I don't know. I've said that before, but it's very difficult to define as one of those traditional recessions because we've had this rotation. I still see rotation at this particular point. Okay, I'll be back in a second with some of the other questions. I wanted to get to APPN. APPN is the APN core. It says here, business process management. It once was a semiconductor manufacturing company located in Sunnyvale, California. Hey, what happened to APPN? APPN, there it is. So it made a peak D top at 43.61 on the 18th of June. It made a cup formation in the weekly charts, fractional new high, G/C, having made a peak F before with a very sharp pullback to the 25s from the 44s, 43s, and now it's in leg C in the monthly chart. Oh, I guess they've changed. They must have sold or done something because it's now new. It's an IPO since earlier last year. So it's been going for about a year and a half. No, year. So the question. Morning, Basil. Morning. When you look at APPN, it looks like a left side, right side price time match, then a drop bucket pattern. I'm in at 27.55. It's a 35.02. Ooh, and sold. Oh, great. And sold off at 38. I was waiting. Usually you do some selling as well. At 38.58, bravo. It has done a fib 61% retracement. What do you think about adding back? Thanks, Greg. Greg, I'm going to suggest you hold off. 3 reasons. One is you identified absolutely correctly the drop bucket pattern, the pattern I call the double top. Why is it called the drop bucket? Because it looks like the backhoe that has that bucket and picks up all the dust and dirt and gravel and stone and then opens the bucket and drops it because it fails at the double top iteration, right? So what we're looking at here, that fractional new high, is saying that we've gone halfway into the cup from the lip on the left side to the base, and therefore there's a really good chance if there is a close under this week's low of 32.63, it's at 35, down 16 cents. Yeah, I'm going to be very strict. If there is a close below the low of 3 days ago, be really careful because there's invariably a decline that takes you to the left side cup low, and that would be at 24.91 or towards it. So just be real careful. Number 1 was the peak D in the daily. Number 2 is the cup formation, which you identified perfectly. There is a left side, right side to the low. Oh man, could you get more perfect than that? You take the low and you draw yourself a plumb line, and it also happens to be 1 bar before. There you go. So here's your plumb line. This is the low that was made right here. Draw your plumb line, and then you add the same number of bars to the left side. Remember, the chart doesn't know. You're counting its bars, and then you take that and you put it over there. You change the color because this was down, so you make it red or maroon. And now you go on, look, perfect to the bar, exact Chapman wave, left side, right side, price, time match. Now you go, no, the third thing was that it was an IPO, and we've only got this number of bars, and it has gone to a leg C, given back 2 candles, huge wicks to the downside. It means it's not able to sustain the rally. So I'm just saying, be a little careful, have patience. Just email me again if you see this trading at 31.60 in the next couple of days and next week. If it breaks out above 36.79, then I've given you, I've lost for you the opportunity to at least get in safely now at 35 with a really good stop. I'm prepared to take that risk. MACD's bad, stochastic's bad. The weekly chart is just turning down. No, I can't do it. In good faith, I'd be pushing my luck if I said to you, get in now, even with a little bit, because I think it's going to be coming back at least to test this wick that was hit the 50-period exponential moving average of 32.63. So be careful. Next question I had, cat, can I look at Caterpillar trading? Oh, I tried to bounce it. No, Caterpillar is really in the doldrum. The cat is looking like a dog. No, I don't think that's right. I like dogs. I like cats. It's looking very poor. There you are. They're very poor. It's a technical term, and you can turn to page P in your technical analysis book, and you'll see poor. And that's what it's looking like. UTX, nice rally here. We're still long a small portion. We've taken nice profits, but I just didn't want to be at risk here. I wanted to hold a long position to see if this correction includes United Technologies taking out our entry point. I don't know if I'm going to have courage to 119 something is our entry point. I don't know if I want to take a chance, give back so much of the gains. 119.77 way back May the 7th. So yeah, we'll see what happens, but it is acting quite well. But no, Triple M, which should be acting well, can't even hold the gain of today. Not good. H pattern in the weekly chart. Now look out. XPD. Oh, I've not looked at the XPD for a while. Is that dollar XPD? Yes, dollar XPD. Ever since we got taken out of our this is the ARCA Security Broker Index, made a peak D in the monthly. You see, my big concern here is that there are so many D's, E's, and F's in monthly charts that I just have to respect that this could turn out to be a much deeper correction. I don't know. See the arch formation in the weekly chart? Just a perfect example of a right shoulder failure pattern, or the lowercase h. And that's the reason we were long. A broker, we just got out of it. I said, I don't like the way it's acting. Took a 0.5% loss, or one, I don't know what it was, small loss. I'm out, done. So I'm real cautious about this. The broker index is just telling me something's going on here and you better respect it. Next thing I wanted to do is to look at Goldman Sachs. You know, Goldman Sachs, it's up a little bit. Yeah, it's up 2.18 today, after where it's been in the 275 area to be trading at 220 and then 223 today. Whoa, 225 actually, 225.95. Yes, it's a nice little rebound, but I'm only treating it as a rebound. That monthly chart, everything about it says I must have missed something, because that really looks like a D. I don't get a D. I can't even make one up. I can't even get an alternate count. It's a C. But all I can say is that I don't like the way Goldman Sachs has been acting. I think later on it become one of the stocks du jour, but not yet. All right, folks, we'll be right back. Basil Chapman, Tiger Positions out.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the Russell 2000 right now, futures down 11 points at 1663. You know, 2-minute chart, 10-minute chart, made a peak E. And the Chapman wave, it's coming down, making an arch formation, just took out, not yet, just about take out left side low. That's not good. Look at the E-mini on 10-minute basis, made a peak G. That line just kept climbing. Look at the MACD, and then across negative. Now you've got the H pattern. Watch 27.27, a close below 27.25.50 on a 10-minute bar would suggest that you've got a real resistance now, 27.27 to 27.31. This is just for those traders. Okay, let's get back to our nitty-gritties here. There are a couple of things that I want to look at. I had a question about, Mike in Ormond Beach. Mike, how are you?
Hey, Basil. Basil, I got into this stock, trading symbol ESV. I guess it's with energy. And
Yes.
I got 200 shares. I think it was around 585. And I sold half of them today when we got above 715. I didn't know whether you think I ought to keep the other half on, or you think, you think we could go much higher with this, or we're just double topping from the top we made a couple of weeks ago.
Ensco PLC new, I guess they must have done something, but it's new. So I would immediately, if you know my work, what I do, let me just double check. I'm going to go A, B, C, D, E. So it makes a peak E on the 21st. Is that 21st? Let me see. A peak E in the Chapman wave methodology on the way up. On the 22nd, it goes to $7.60. Then it comes back, and that looks like an A to B equals C to D. That's the lightning bolt pattern. Fails at a peak C in the arch formation right there. Comes down and hits $5. And wow, you got in almost at the low. Very nice. So this is what I'm going to say to you. So 576 was the low on the 15th, and now it's in leg C. I would immediately draw. I wouldn't be able to do it to the bottom. I'd do it here, left side, right side price time match, and I'd go to what I consider the most important bar right there. And I would then go click, click, and I've got the clickers going. And that says by the 2nd of July, that's this coming, there you go. On the 2nd of July, is that Monday or Tuesday? That's Sunday. Wait, I'm getting confused. Oh, it's Monday. By Monday, there's a chance if it closes in the next day and a half. What's today? Got time. So if it closes in the next day and a half above, what was the high today? 722?
22, yeah.
If it can close above 722 to 725 any day, in other words, it could even take 2 days to do it, My target would be the left side high that was made on the 20th. Oh, what did I say the date was? On the 22nd of May of 760. Now, one of the things it's too late to do it. You did nothing wrong. You had a plan and you've implemented that plan. What I would have said to you right now is because the strength, the MACD has just crossed positive, days young, but so far it looks very good. And stochastic's rallying. I would have said to you, just raise the stop to about on half the position, or even a third of the position, because it looks very good. I would raise the stop to $6.95 to $7.03, just to kind of lock in a profit. So you've kind of done that already by taking off half the position. I'm going to say to you, hold this position, and something really terrible has to happen for this to break in the next few days below 685, 680 support. That to me would be the support. So I'm ABC. I like what I'm seeing because I think this is trying to go to a leg D in the weekly above that 760 high that was made back on the 22nd of May. I like it very much. And in fact, if it can do that and it can close any week in the next 2 weeks, between this week and next week, above $7 and let's call it $7.65, that monthly chart is going to improve technically a lot. So I like it, and I think that you did exactly the right thing. Good trading, a good eye, and the only other thing I would say to you is, if it does break above that $7, what did I say it was in the short term? $7, I think I said 20, somewhere around 726. You want to actually close above there. On any pullback after that, if it's just a mild pullback, I would add half of the position you took off because there's a real good chance that it's going to try to go for that upper level. Good eye, and I like the stock. I think that you had I don't know how come you chose it?
I don't know. I listened to a couple other different technicians, and it was one they talked about a couple weeks ago, and I kind of had my eye on it. I studied it, and when it got to a decent area where I thought it would be a decent buy, that's where I bought it at. So. Very
good. Okay, I like it. I think you. Another reason why I like it, it just took out all that conglomeration of the trade between $7 and $6.18. It just took it right out. So I like it. I think you like, and I think that crude oil is going to go higher in the shorter term.
Yeah, so, and I think when the oil numbers came out, that's really what propelled it up.
Okay, good. All right. Well, you've got a winner. Congratulations, and that's really a nice trade, Mike.
Thank you.
Thank you very much for calling. So I had to go. Oh man, I don't think I'm going to be able to do it. I just got a slew of questions. Time is near, maybe now. All right, I haven't got time to read them. I just got a slew of questions. So what I'd like to do is, I'm pretty sure that some of them will cover the transportation index. Look, IYT down another 9 cents today at 188.53. I've been saying that the fact that the transportation index, the semiconductor index, the Dow, and the S&P refused to go back to their January highs says to me, have respect for this pullback. I think it might turn into more than a pullback. Just be real careful. And if you're in long positions and they're working, hey, that's fine. Just, raise your stop on some part of the position. Just be careful. Be aware that the pullback that we've seen in the last week and a half has affected some of the indices that were the very best. For instance, the IWM led the way. And now look at it. Look at it. It's down 87 cents today. And we took a third of our short position off of the 300% long. We've kept the rest. I really think that the 163s is going to be absolutely critical. It's going to tell me whether to hold or fold. Hold or fold? No, it's the same thing. Yep, hold or fold. So let's go on now. The question I had, I can see right now. Okay, Federal Express. I was just thinking about this morning. I hardly ever order anything. I'm not a big buyer of things. But I went to Amazon and I ordered so many disparate things like tennis strings. You'll see I've got my international tennis shirt here that I bought because I was going to have one of my lessons in Newport. We were there for the week. It was lousy weather. I decided just not to do it. Anyway, and I ordered a mouse, one of these little mouse that you can see, the little tiny ones. Most people like the big. I like real tiny. So, and I'm saying to myself, wait, they're going to bring one of this tiny little $7, $9 mouse, especially Federal Express or UPS, and then they're going to bring, what else did I order? Yeah, just a couple of disparate things coming from all different places. It's weird. I mean, the transportation for all this should be making the transports skyrocket, but they're not. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Don't forget, folks, Steve coming up right after this, and you got Dave White, you got Tom O'Brien. So check out my opening calls, my daily newsletters. I really mean daily, every day of the week. I send it out. We've got some real nice positions. Does it keep up? Well, we're doing our absolute best using the Chapman Wave methodology. We'll see. So UPS is what I was really looking at. Federal Express looked weak. UPS is also very weak. Made a peak D in the monthly chart back in January of this year, way back in 135, trading at 109 right now. What's going on? I'm getting all these things delivered, and UPS is not making money. Well, they're spending so much money at Amazon. They're paying for the with Prime, they pay for the stuff. I don't know how they can make it work in this particular instance. All right, so here we go. UPS is trading down. Federal Express not so good. FXI, good question, Julie. This is FXI. I said don't touch. It's got the same thing as GE when it made that propeller shaft move down sideways, and then a propeller shaft equal 1-to-1 to the downside. It's in the process of doing that. FXI is China 25. This is the heavy duty large caps. Watch out. That monthly chart is in a leg B to the downside after making a peak E top. Next question I had was, whoa, let's go real quickly here. Oh, Baba. So the other question about some of the Chinese stocks. Yeah, Baba, I think, had a problem. It made a peak D top in the Chapman wave back at 211.70 on the 5th of June. Now it's trading at 187. Whoa, this is not good. And leg E monthly hasn't made a peak E, but I'm watching this. See, I'm getting a little cautious based on my monthly charts. Tomorrow and the next day, Friday, I'm going to spend a lot of time on monthly charts. Why? Because it's going to be really impactful coming up in July. So let's see, we're about to run out of time. Oh, VIX index, of course. I'm sorry. I used to spend so much time on the VIX, and then I found out that the VIX is it's the levels in the 16s and the 15s to the 17s hanging around here tells me the selling pressure continues. That's just keep it in mind. In the teens, when you go to the 20s, you'll see triple-digit down days in the Dow and very strong percentage down in the S&P. As soon as it goes back to the 13, the 12s, nothing to see here, folks. Market will go back up. Right now, we'll see if on Friday it holds in the teens. That'll be the first time it's done that in a long time. Basil Chapman signing off. Check out my opening call. Be back tomorrow. Have a great day. Stay tuned for Steve. Should be a great show as always.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.